Julie, thanks a lot. Let's stick on the market. Still with us, Kit Juckes, SocGen Chief Global FX Strategist. Just looking at sterling, holding above 140, Kit. I mean, the expectations for a rate hike in May have obviously risen. The Brexit side of the equation, is it all down to the transition now? Is that what you as a market watcher care, whether we get one, what the sort of details are of the transition?
Yeah, I guess up to a point. I guess you could sort of narrow it down to say, you know, we've been priced for terrible news for well over a year now. And so we've had a little bit of a bounce in sterling in terms of the sense that sterling's gone up against the dollar with the euro in the last move and hasn't weakened against the euro. So I'm looking for anything transition saying we would react well to any good news on the transition were we to get any. Still waiting.
Yeah. And the expectations for a May rate hike, you think they're pretty solid? That comes...
Yeah, if you got delayed by a couple of months, it wouldn't make much difference to the foreign exchange market in the sense that, yeah, we're going to get a couple of rate hikes through the system. Bigger question then is how people think the economy looks probably in 2019. I mean, the focus is going to shift on from that. You know, that the economy hasn't fallen off the edge of a cliff, we get it. But it's not, you know, but I think that's as far as it goes. Rate hikes because there's a little bit more price pressure, which people hope will fade away. Won't do much to support the currency on their own.
Kit, what does it mean to you that FX basically sat out the recent market turmoil? I mean, yes, now there's a little more volatility in different pairs and crosses, but really during those few days there was nothing. You know, you can't create or destroy energy in these markets, so they move around, and it wasn't the foreign exchange market's time because of the way that things were moving, and so that's not necessarily so surprising. And in a sense, you know, some of the moves we'd seen in rates markets, you know, we'd already preempted in the currency market in the way that the euro, for example, or the emerging market currencies had rallied last year. So, yeah, you know, energy can't be around, but we will still pick up the pieces in the foreign exchange market going forwards. I just looked at other stuff for a few days.